Hi everyone, welcome again. This is our weekend update. It's November 8th, 2015. Thank you for joining me. This is Christopher Aaron coming to you from iGoldAdvisor.com. And I just wanted to say quickly thanks to all the new subscribers. Thank you for joining me. And thanks to everyone who has been following this analysis for the last several months. I do believe that we are at a critical time in the price of gold and silver as we enter the final innings of these bear markets. And it's really my intention to just try to bring you the most clear, understandable analysis as possible of not just the long term, but also the short and the medium term, so that maybe we have the opportunity to buy at better prices or maybe do a little bit of profiting on the side if there's a trade opportunity. But really, my focus is to try to help people keep perspective of these markets. So I hope you'll stay with me as we go along and the next leg of the bull market emerges in the near future. I wanted to start today with a request. I had a recommendation from a viewer to do some analysis on the gold to silver ratio. And I just want to talk about that. I'm going back to the original format for this video, doing gold and silver at the same time. And here's why. So we're talking about the ratio between the price of gold and the price of silver. In other words, how many ounces of silver does it take to buy 1 ounce of gold? Here we're looking at a chart of the last 15 months, just over a year. So you can see over the last year, roughly this range has varied from between 69 on the downside and 78 on the upside. Let's call it an average of 73 ounces of silver to buy 1 ounce of gold. Now that's a lot of silver to buy 1 ounce of gold, historically speaking. But I think it's important that we follow both of these markets at the same time, because although this ratio can vary, there are some very strong correlations that do happen throughout some periods of time. So take a look at this chart. Let's back this up now. We're looking at a 5-year analysis of the gold to silver ratio. And you can see what happened at the last time silver spiked in 2011 and hit $48 an ounce. That ratio came down to 32. Here we are today at roughly 74. So in other words, every ounce of silver bought you twice as much gold in 2011. Now the question is really, what is the trend going to be going forward? And I just want to bring up my key here so we can all be on the same page. Since 2011, we've had a series of these broken trend lines. You see these turquoise lines here brushing out like a fan. And this has represented this ratio moving higher and higher. And we've been in this channel shown here by the royal blue lines, which brings us kind of right up to today, to this 74 level. So this ratio is still moving higher. We're still in a dynamic right now where gold is gaining value relative to silver. Now that's not always such a good thing for silver investors to hear, but this is the data. So what I'm trying to do is really show what the data shows and go from there. But a 5-year time frame is not enough. We need to look at where this looks over the course of a longer time frame to see what we might have going forward. So let's look at that now on a 35-year, let's call it a generational time frame. Here's that channel that we were just looking at. So since 2011, the price of gold and the price of silver moving in this channel where gold is increasing in value relative to silver. However, when we look at it with this long-term trend in focus, we are looking at a market that has been in a long-term sloping downtrend channel. So you see this here shown in magenta. This is the long-term trend. This has sort of been moving up, down, up, down, up, down, and right now still going back up, but with the overall trend moving down at a very slight slope. Now in 1980, the peak of the bull market after the 60s and the 70s, when gold was taken off of the standard against the US dollar and silver was removed from coinage in the United States, in 1980, that peak of $850 an ounce for gold and $50 an ounce for silver resulted in this ratio hitting right down here, almost 15 to 1. So in other words, silver was valued, what is that? 1, 2, 3, 4. Silver was valued 4 times higher relative to gold in the last peak in 1980. So there's a historical precedent here that we are paying attention to, where at the end of this bull market, we may be looking for a ratio to approach this level again. So I've drawn this green line all the way to the end here, and this is basically to say, let's watch this ratio over the next several years and see, as this primary blue channel here breaks at some point, does this start to approach these lows again? My feeling, my strong feeling based on an analysis of the historical cycles, is that yes, it will. Moving that back out to an even longer time frame here, 325 years worth of data on the gold to silver ratio. Now this chart happened to be cut off in 2012, but we all know where we stand right now, roughly 75 on the chart right here. But look at this, from the colonial period in the Americas through the Civil War to the early industrial period, you had the gold to silver ratio roughly 16. And this is what is sometimes called the natural ratio for gold to silver. It's basically the amount of metal that exists in the crust of the earth as we're actually digging it out. There's roughly 15 times more silver in the ground than gold. So that's why that ratio has been like that for so long. Now, we've been in this kind of crazy time period when you look at the broad spectrum of history, where silver has lost a lot of value relative to gold. However, you can see at the peak of the bull market right here in the 1920s and the peak of the bull market in 1980, this ratio got close to 15 to 1 again. So we're living through this period of history right now where things are really unprecedented. I mean, you have for the first time in history the central banks of the world where every single currency is based off of a fiat, based off a government decree with no tangible backing. You know, you have unprecedented amounts of world debt, and you also have an unprecedented level in the gold to silver ratio. But it looks to me very strongly like if history is going to rhyme, which it often does, this ratio is going to be coming back down. That said, it's not going to happen in a straight line. So you have these spikes, right? We've had these spikes already. And even on the way down, even as silver gains value relative to gold, perhaps over the next 10 years, there are going to be multi-year periods where this ratio moves in a counter-trend direction. And we're in one of those right now. So there is merit to owning both metals, and I just decided to go back to this format today. I'm just experimenting with different formats here to see which works the best, and by all means, please leave any comments or feedback you have or questions so that I can make these presentations a little bit more clear. Based on this analysis of the data, we are truly living through an unprecedented time period, and I really want to try to provide some clear current analysis of the state of these markets to people as we move through this historic time period together. Turning now to the current action in gold. Big down day on Friday. This brings us to 1090 roughly for the close. Now, 1090 is a few dollars above the low for this bear market that was set in July. Right here, this spike down where my mouse is. So we had this downtrend line here that was broken to the upside, and then look at it faked everyone out and it broke back to the downside. So this is really indicative of a market that is experiencing a lot of turbulence. You often see turbulence as a market will enter its final bottoming phase, and that's what I believe this is. Sorry about that, we have two keys up here at the same time. But just to bring our attention back to the chart here, what we're looking at now is a retest of the July low. So we're only $15 away from that. Here's that green circle labeled as a retest. This is our target. What happens at that retest will be very critical to watch. Does this form a double bottom or does it break down below the previous level? And that will give us a strong indication for the next several months to perhaps a year going forward as to what do we expect. Here we're still looking at gold as shown in this green line here. This is gold related to the CRB index. CRB index being a basket of commodities. So we can see that even as the price of gold has been moving lower over the last year, gold has been gaining in value relative to other commodities as an average. So that is significant. It shows us there is something happening with gold. It is being accumulated even as the price is going lower relative to other commodities. So backing that out, we're looking at this 15-year chart, which I showed last time. This breakdown here looking even more likely to happen as we get to these July lows again. And if this breaks below the July low, we have labeled this as an extremely strong confluence of support levels that exist roughly between the 1033 and the 850 level. That's this green band shown here. And just to go over those quickly again, there is a horizontal support here shown in black, which extends back to 2008. There's the 61.8% Fibonacci retracement. There's the 1980 all-time high, and there is a linear bull market uptrend. And then actually not shown on here, there is a head and shoulders target that gives us roughly 990 an ounce. All these support levels coming here in this green band. So the analysis is that if we break down below 1075, which looks to be testing this week coming up, here's where I expect the final retest to occur of this 4+ year bear market. The 4+ year bear market being a retest of the multi-decade consolidation. For anyone new, I'm just showing this chart here for you because it's so critical to remember the breakout that has occurred here, even though prices have been going down for the last 4 years. This retest will be a historically significant retest and should represent the final time to buy within the $1,000 level before prices begin to accelerate upward again over the next several years. Moving on to silver, the past 3 days. So we looked at the gold to silver ratio, and now we're looking at silver itself. So keep in mind that ratio at that high level around 74 or 75. In other words, it takes 74 or 75 of these silver ounces to buy that 1 ounce of gold right now. And you had this weakness coming back down below 15. See this spike right down here toward the end of the day, the end of the New York close? This is a short-term bottom. This is often the kind of action that you'll see when a commodity is bottoming over the short term. You'll see a spike and a rejection. Now, why is this bottoming here for the short term? And by that I mean over the next several days. Well, take a look at our 1-year chart again. We have just come back down to this level I've been talking about for the last 2 weeks, right at 1475. We hit that short-term uptrend line here, shown in teal, and it bounced. So that little spike down was that bounce that you saw. Now it looks to me like this is going to hold the price here for at least a few days, and we'll have to see what happens. A lot of that is going to depend on what happens to the price of gold. If the price of gold breaks to a new low, this uptrend line will not hold here in silver. Silver will follow gold over the short run. If gold does not break down, this teal line and this blue line here are going to converge throughout the month of November and December, and this will form an increasingly jagged battle here, up, down, until one or the other lines breaks. There we're looking at that primary downtrend again over the last 10 years, just to put that in perspective. This downtrend happening since 2013, the overall bear market, of course, since 2011. That's how critical this battle is that's coming up here in silver to sort of break out for good above this $16 level, because it's really going to represent the final bottoming process. So that's why there's so much congestion at this level and so many repeated attempts to break out of this level, because all the traders and all the big bullion banks and all the hedgers are paying attention to these levels to try to gauge when is this market turning around. So if you're a long-term accumulator, you're in a very nice place here to be adding some metal for a long-term investment as we get to this linear uptrend line here that's been hit several times over the last 10 to 12 years. Now, if gold breaks down below 1075, as I said, silver will follow. So if that happens, there may be an opportunity here to pick up silver in the $12 per ounce range, of course, on the spot prices. All the coins, all the rounds, all the bars will always have their premiums, just as a cotton t-shirt has a premium over a bulk package of cotton off the plant. But that said, if you get one more spike down here in silver, I believe that will represent the absolute bottom for this bear market before the next rise, which I believe will take us above this $50 an ounce level on that 3 to 5 year time frame. Oftentimes the silver market likes to violate these important trend lines to kind of fake everyone out. So that's something I always keep in mind as we're analyzing these charts, is that it's only a map, and a lot of people follow these maps. And so there are people that do try to manipulate the maps, you could say, to kind of scare everyone over the short run. So if we do see that drop here down to $12 or $13 an ounce, I'll be bringing that to you. And let's keep in mind, if this line here breaks for a day or a week or so and then comes back up, that may be what we have seen, is that final scary flush before the market is ready to turn. To wrap it up today, guys, thanks for staying with me. Gold looking at that low of 1075. If it breaks, we're looking for the final bear market between 850 and 1033. I gave those support levels on that 15-year chart. Silver is at the uptrend support at 1475. We should see a bounce there for at least a few days. However, if gold breaks, silver is going to follow. Looking for the final lows in the $12 to $14 an ounce range over the next few weeks to few months, should it break down. We don't have that confirmed yet, but that is the possibility that we are at least keeping in our minds right now so that we're prepared. Guys, thank you so much again for joining me. The next update will be most likely on Tuesday or Wednesday evening. I just did want to mention briefly, I had another article published on the Gold Eagle website. I'll have the link to that in the information below. That provides some more detailed analysis on how I arrive at some of my targets for anyone that's more interested in really getting into the nitty-gritty of the numbers here. That's available for free for you on that link. Thanks again, guys. I'll see you in a few days. Have a nice Sunday evening.